everyone, and welcome to the True Potential Do More With Your Money podcast, episode 208, on inheritance tax, wills and probate. Exciting session for today. I'm joined by some new guests. I believe you're new, John. I don't know if I've been on a podcast with you. It'll probably be your best one, I would hope for, John. We've got John Mason. Your new job title as well, John, is?
Senior Compliance Officer.
Yeah, so you just changed role after doing some a variety of advice roles. So in terms of technical ability, we've got the good man there. We'll pass across. We've got Mr. Neil Rayner, Head of Central Advice. Welcome, Neil. I don't think you need an introduction.
No, been on quite a few.
And Peter, this is your second one?
Third.
Second one with me then, I think. So, yeah, I think we've no introduction required. So we'll jump straight into the topic today. And it's mainly around wills, probates, and where we can help, I suppose, when it comes to advice with all those topics, especially around if you've got an inheritance tax issue or something that you need to consider. But I think let's talk about, I know we've talked about this on podcasts before. Pete, I'll start with you about the importance of making a will.
Wills are fundamentally important when looking at how your estate is distributed on your death. If you don't have a will, you die intestate, which means your assets may not necessarily go where you would wish them to go, because under the intestacy rules, there's a laid down procedure for how your assets are distributed. So it is fundamentally important that if you have clear views as to where you want your wealth to go on death, that you have a will, and that it's a totally valid will, which means really you should get legal advice on it, to make sure that on death your assets go where you would wish them to go.
Yeah, and I think it's we did a session on wills with a lady from Wombledon Dickerson a little while ago. It's a good podcast, so we'll maybe try and give a link to show that. But it was a great podcast in terms of talking about the underlying detail. We're not getting all the detail today, but Neil, what are the areas that you would say that we would, clients should consider? Part of our advice process is always if someone doesn't have a will, we ask them to do it. So what's the areas you would ask them to consider when doing that?
Well, typically people do have a will when they get to a certain age. Typically a mirror will. Obviously, as Peter's just said, it's really important that you do have a will because it gives you control over your estate when you're not here. And like Peter said, if you don't have a will, you're intestate. That really leads to a lack of control when you're splitting up your assets, because the first 250k normally goes to the spouse, but then it could be split up to people by law that you don't want to inherit those particular assets. So first of all, we make it a real importance in the fact find, and it's always pointed to an advisor that you need to make a will as soon as possible. I think you've changed yours quite a few times, haven't you? And realised the importance, and your family's grown, and obviously you understood you need control over that, and it's really important as you get older, that your assets go to the right people.
I think and that's an important one, Peter. I'll bring you in here as well. It's all right setting up a will, but actually keeping your will maintained is actually equally as important, isn't it?
Yeah, you should review. You don't need to review it every couple of months. It's one of the sort of things you should review every 4 or 5 years. Circumstances change. You've got older, so it's very important to just review it. You may not change it. There's nothing wrong with looking at your will and thinking, no, it's fine. But it is something that shouldn't be cast in stone. But having a will in the first place is the most important point. It's then easier to change afterwards.
I think there's a couple of points on there as well. If you remember from the last podcast, Jamie, when we were talking about how valid your will is if you remarry. It's not. It's things like that people don't understand, and we try to bring that out in conversations with the clients when we're giving full advice.
Yeah, I think for me personally, I kind of spoke about this on the podcast before, but it's one of these things, the same with pensions. I foresee a will as something I'll sort that out as I get older. And that's obviously, you can't predict when you're going to die. And I think if you want to really, understand where your assets go and they go to the right place, it's very important, because I think before I kind of looked into this in a little bit of detail, I thought, well, as soon as something happens to me, it will end up with my wife. And actually, that's not necessarily the case. Obviously, you've got different rules around a testate. I think that's so important that you think about it. And also, it's not just about distribution of assets. It can be about other things, about potentially if something happens to you, sadly, and your partner, what happens to your children, how are they looked after? How do you sort of distribute money to those children if they're underage? These are the sort of things that you should consider. And John, being a new father, is this something that you've been thinking about?
It's funny, we've actually had this conversation just the other day, last week, I think it was, because it becomes a lot more pertinent, especially if you're not married. So even if you live together with your partner, you might assume that if you were to pass away, they would immediately inherit everything. Well, that's not the case. The inheritance tax rules don't really consider, tenants in common, people living together outside of marriage as a couple. So in my scenario, where I've got a young child, all of my estate, because I don't have a will, would immediately go to my 4-month-old son, and my partner would be, kind of eschewed from the will. So I think for those who aren't married, it's particularly important to make sure that you've clearly set out who you want to benefit, because it won't necessarily be your partner at all.
Yeah. I think the other point, and I know we're going to talk about inheritance tax later on, but because intestacy moves you in a particular area and it governs where assets go, you could quite easily create an inheritance tax liability, because not everything necessarily goes to your spouse. So with an intestate estate, you can easily get an unexpected IHT liability, which you could avoid if you did have a properly constituted will.
Yeah, I think it's quite vital. There's different rules around it, but I think the main thing for us is really just ensure you have one. If you are going to go and get a will, typically you look for a solicitor, etc. We are looking at someone as a business, how we can support and help our clients with that process. But it is vital that you do have that, especially from my perspective. It's actually a difficult time as it is, but this can make things slightly more easier if we know the assets are going in the right places for us. Okay, so moving on to probate, and I think this is important in terms of, let's just talk about what probate is and how you actually obtain that. I don't know if you maybe just share a little bit on it.
Yeah, so assuming that you do have a will, then obviously that determines where your assets go. But in order for your executors to move the assets to where you want, they need to obtain probate, and that really is just a mechanism for giving them the right to deal with the assets. So banks will not deal with an executor until they've seen a letter of probate, which is giving them authority to deal with the assets on behalf of the deceased. Probate is actually a relatively simple thing to obtain. Be fair to the government, you can do it online. It's a relatively simple mechanism. You just tick a number of boxes. So don't be afraid of it. If you want professional advice, you can obtain that, but it's not necessary. What I would tend to avoid is doing probate by paper, because, as you might see from the press, there's a lot of delays in obtaining probate, and that does seem to be linked to people making paper applications rather than online applications. But online applications generally seem to go through quite quickly, and you get a letter of probate back very quickly. But if in doubt, obviously, obtain professional advice.
Yeah, I think this is it. It's a relatively straightforward process where you can go online, you can take legal advice to take over that'll be at a cost.
Yeah.
But it really depends on your situation. I think from our perspective, how we can help, and I think what I would say is when an ISA and a general investment account is inside of a client's estate, but a pension, Neil, John, is different. So it's not a case that it has to go to probate. It's actually within a trust. So let me explain a little bit about that.
Yeah, so you're quite correct. It's obviously outside of your estate, whereas an ISA and a general investment account is counted within your estate, so it goes towards your inheritance tax limit of £325,000 per individual. But because the pension is in trust, and we also have the option to name your beneficiary, there are different pension rules around it, whether or not you die pre-75 or post-75, how it's taxed. However, the pension is outside of your estate, which is more important. And filling out the expression of wish form gives the client control on who they would like those funds designated to in the event of their death.
Yeah, and it's something we can do, rather quickly if need be. We try and
a good point. What Peter's just said is the delay in paper applications. As you know, from a client side point of view with ourselves, you can fill out the beneficiary form from your client side, and it's recorded immediately.
Yeah, and I would say if you're ever in that position where you're looking for assets and you need to know a little bit more about it, then just give us a call. I think one of the key things on our service proposition for all our advisors, whether it's service sent from head office or serviced from one of our advisors, is we're here to look after the family. That's one of the key areas, and if you do need any support or help with this, please give us a shout. We'll either support you where we can from a financial advice perspective, but also support you
Yes.
If we need to refer you on to a professional or something like this. How does that work, Peter, from an IHT perspective, when it comes to probate? How do we calculate that? How does that work?
There's actually a form you have to complete before you can get probate. You have to complete an IHT form, which again is a relatively simple form to complete. You list your assets, and that determines how much inheritance tax you have to pay, if any. Many estates, frankly, are exempt from inheritance tax because everything's going to the spouse. And that makes it a very simple form to complete. Or the estate is below the threshold of just 325 per person, plus an extra 175 for the house.
Yeah.
And that allowance is carried over to the other spouse if you don't use it on death. So you can actually find most estates under $1 million have no inheritance tax at all. So it actually is a relatively simple form to complete. But you have to do that first. You can't apply for probate until you've filled out the IHT form.
Yeah, and that's quite important. I think just taking a step back there from an advice perspective, what are the sorts of things that we can do, Neil, John, from an inheritance tax sort of planning perspective for clients? Because as I mentioned, it's normally passed to a spouse, so it doesn't happen on the first event. But from a second event perspective, what could we do from an advice to help clients?
Yeah, certainly. So you can start to get into areas of advice involving trusts. So if, for example, an individual who's still alive finds that the value of their estate is going to be above their inheritance tax thresholds, they might want to try and address that. So they may have some funds that they potentially don't need access to during their lifetime, or they can't envisage a scenario where they would spend those funds. So rather than waiting for those assets to be dealt with upon their passing, they might decide to put some of it into trust immediately, which could potentially have inheritance tax benefits along the way. Sometimes people will consider gifting money is a strategy that you can use. A lot of the time when you make a gift, there's a 7-year rule where after 7 years it can drop out of your estate and no longer be considered for inheritance tax. I think one of the other really important things, we were talking about making a will and the way that your assets are going to be passed in amongst your family. We've also said that you've got your £325,000 exempt amount for inheritance tax. On top of that, Peter, you mentioned the £175,000 allowance that you have for your property. That allowance is only allowed to be used if you're passing your property to direct descendants of yours. So if you think about a scenario where someone does pass away without a will, if suddenly their estate could be jumping around to people they weren't expecting, it might be that residence band doesn't actually become applicable. It could end up creating an inheritance tax issue if you haven't clearly set out who you want to benefit from your estate as well.
Yeah, that's really important. And I think it probably emphasizes the need for, if you feel like you're getting to that bracket of close to £1 million, including your property and your other assets, speak to an advisor so you can do some planning like this, and that may be involved setting a will. Neil, it may involve doing other areas.
Yeah, I mean, John mentioned the gifts. We mentioned obviously potentially exempt transfers within the 7-year rule, which you can gift to somebody, and it's outside of your estate. John mentioned trusts. There's also a lot of different types of trusts. So if you wanted to put a larger amount in and then still receive an income from that trust, if you wanted that trust just to go to somebody, there's ways of getting it out of your estate. There's also a small gift exemption of £3,000 a year, which a lot of people are advised to use because you can use that in lesser gifts of $250. But, the majority of clients won't know that, and they'll really need some guidance when that time comes. Or they might want to do it just before, or they might want to do it, if they're dealing with a situation where, they're having to think about paying an inheritance tax bill. It's always wise to speak to a financial advisor because we can have a look at, the value of their property. We can have a look at the assets. I talk to clients all the time about pensions, and a lot of clients don't know that pensions are outside of your estate for inheritance tax. It's really funny because when we're speaking to clients, we have to correct ourselves and say, you couldn't be due for IHT. And they say, what's IHT? And you think, we use this every day, so it's common to us. But, it's really good for clients to have a chat with a financial advisor and just make sure that they've got a good understanding of what the value is and also what they can give away and what they want to give away. Because like John said, some people have got excess funds. They don't require all of that money whilst they're still alive.
any top tips from you, Peter?
Well,
to add on to it.
I think a couple of things. One, although we've treated wills and inheritance as probate separate items, they're actually all interlinked. What is very important is, as I said, you need to review your will, but also that's reviewing your whole estate. So inheritance tax, as people have said, is almost an optional tax if you plan properly. So look at what your will is, look at your estate, determine what you need. If you don't think you need it, give it away. There's another very valuable relief, which is expenditure out of income. So you can, if you've got excess income which you're not using, you can give excess expenditure, so excess income that you don't need, and that is outside your estate for inheritance tax purposes. So that doesn't even need the 7 years, provided you're doing it regularly.
Yeah.
So planning on your will, planning on your estate, planning on what your IHT position is all part and parcel, and is all linked with each other. And it does change over time. It changes with your circumstances.
And it's really important to think that every client is different. You might have some overlying rules, which applies to everybody, like the limits, and you can pass it to your spouse. But everybody's got different amounts they've got invested. People have got different, amounts of children. Everybody's circumstances is different, so it's always wise to speak to an advisor to get it reviewed.
Yeah,
and then take legal, advice where possible.
I think I always find this an interesting subject because no one wants to talk about death. No. You really don't. But I mentioned this before, but I spoke to a beneficiary probably about a year ago, and one of the things that she said to me that really kind of hit home to why this was important was our dad was sadly quite poorly. He was one of our financial advisors, really, really top individual, and he sat down with the family and explained everything in terms of where everything was, what we'd expect, the value of his business, where certain funds were. He set up a position in terms of, ensuring that his wife would, get the funds at speed when it comes to pension, etc. So we were aware. And he was in the, I wouldn't say fortunate, that's probably the wrong word. He was in the position where he was able to do that and knew it was imminent because he was sadly had an illness. And I think that kind of set a resonance to me in terms of it's really important to have these conversations with your family in general, talking around where is your will, what is your plan for your will, where is your life assurance if you need to acquire from it, in terms of that sort of stuff written down, in terms of where are the assets, what's the intention for the assets, and explaining that. So, so the family can pick that up. And I'm aware that at certain ages, you're not going to speak to, John's not going to speak to his young little one about that, neither am I, but you may choose for someone to do that. You may choose like a trusted family member that you can explain. But I think it's really important to have those conversations as your children are growing older.
And also, pick up one point, if you're making a will, have a list of where assets are and what assets you have. So if you have 3 or 4 bank accounts, actually have a list of what bank accounts you have. There are a large number of unclaimed bank accounts in the country, a lot of which are just people have died, and the executors don't realise they have a NatWest account, and it just sits there.
Yeah.
So if you don't actually list what assets you have, an executor hasn't got a chance to actually pass that on to your beneficiaries because they don't know it exists. It's
interesting. I'm very sad in that way, Peter, because I've got all my assets written down and I share that information. Shortlisted. So anyone gets... Basically, I've sent that information to my aunt. It's passworded, so she can't get in it, and she's got the password. And I said, if anything happens to me and my wife Annie at the same time, then I know someone knows where everything is, so my children get it appropriately. And that's actually quite an important part. And you can obviously use your website and things. We're talking around how we can help with the beneficiary sites to add that in, but that's a really important part. That you're right. There's so many bank accounts because you can open a bank account like that these days, can't you? It's so easy. It's a really important part of that planning process.
I think there's older types of accounts as well, where I know personally one of my parents set up an old post office national savings account for me when I was younger. There's still an amount of money sitting in it, but I don't get a statement. It's probably every 3 years they send me a statement because the balance is relatively inconsequential. But 3 years is a long time. If anything were to happen to me, I don't think there's much chance of any of my family knowing that it still exists. So, like I say, it is important to keep an account of where you've got everything squirreled away.
Yeah. So, gents, top tips make sure you set up a will, keep your will updated. Probate, you can use a professional, but you can do it online, and we can help and support you with that. It's in the site. Use an advisor for inheritance tax planning if you feel like you're near the boundaries to discuss. They would be the top tips from today. Brilliant. Thank you so much. Hopefully a nice, short but sweet, sort of really focused session for our listeners today. So appreciate your time, and thank you very much, everyone. And thank you for listening. If you do like this content, please do like and subscribe, and we'll speak to you again next week. Thank you so much. Thank you.